life, right out of school in direct investing. I started at Prudential Capital Group, which has mezzanine funds as well as invests off the balance sheet of the insurance company. Spent a little time in a CLO in 06 and 07, and then went to business school. Very interesting timing. So I came out of my MBA in 2009 looking for a job in private equity, which wasn't the easiest time to be looking for that. But I was very focused in terms of who I was as a person and what my skill set was. And I knew, I'd been in direct investing, but I knew that relationship management was an area that I excelled in, and it was just what I loved. And I didn't necessarily want to stay on the pure direct investment path. And so I really was focused on thinking about fund of funds and fund investing, and got a job with Partners Group out of business school. And then was there for 5 years and helped build out some of our relationships in London. I was in the London office there. And it was a great experience, and really kind of built my base of knowledge in fund investing and working with managers across fund investments and co-investments and also even secondaries, and just really kind of building out the ecosystem that you can have as a good LP and working with your GPs in different kind of facets. And then decided that I'd been in London long enough that 7 years was it for me and my family, and so we decided to move back to the US, and TRS gave me a home in the large buyout portfolio. So now that's where I stand today. I work with all of our large buyout managers, so it's a very fortunate position to get to work with the Blackstones and the TPGs and the Carlyles of the world, on the fund investments, of course, but also in our principal investment program. So TRS is a $150 billion pension plan, give or take today. We serve over 1.5 million teachers across the state of Texas. It's a really staggering number of beneficiaries that we have. And today, private equity is 13% of the trust, so the portfolio is about $21 billion today. And TRS, I think, has been very progressive in terms of its approach to private markets. Private markets are about 1/3 of the trust today between energy and infrastructure, real estate, and private equity. I think that was a stance that our CIO took back in 2006 or 2007 to build us into privates when not all pension plans did that. And so TRS has continued that sort of progression in privates in terms of building out our principal investment capability, and that's a core strategic focus for us today. I think there have been two very bifurcated approaches. One of which is just to focus on what you do and do it well and in scale, and continue growing sort of your core product and not really take your eye off the ball. And Hellman & Friedman's done that very successfully, obviously. And then the other approach, which I really like as well, is to do what you do well, but maybe raise some synergistic products around that, to where when you as a firm approach a company, you're giving that company sort of a breadth of investment solutions, be it a preferred equity structure, a buyout, a growth investment, and I would put sort of maybe a TPG in that category. And I think they're both very valid approaches. For me, it's just about picking an approach that's consistent with your culture and your team size and what you do well as a firm. And that's the key thing for me to look for. I don't think there's sort of a one-size-fits-all with the general partner universe. It's just about maintaining a team size that fits. If you're going to continue growing products, I'd like people to stay focused in terms of the actual boards they sit on and investing well inside of their sector, of course. But it just needs to be consistent with that strategy and kind of culture, for sure. And processes, of course. That's a huge piece of it, right? The right investment committee processes and the right people on those. I think one of the things we're very focused on at TRS, particularly as we look to build out our principal investment capabilities, is how many LPs are entering the kind of direct investing arena or the co-investing arena. And that's a scarier trend and one that we want to make sure we're incredibly responsible in how we build out our program. So we don't, we're pretty careful to differentiate between the direct investing and the co-investing, and we don't today really do direct investing or foresee doing it in the near term, we like to partner with our GPs. That's really our core focus, is to build an integrated partnership with our managers, where we can invest even across the spectrum of products that they offer, and have deep relationships on the co-investment front, where we can work with them on a syndicated basis or on a pre-signing basis. And for us, that definitely means adding to the team. That's a huge part of it for us. I mean, we are a public pension plan, so we're always going to be limited in the amount of resources we can put behind the effort. But it's a strategic focus across the trust right now, to increase team size, particularly in private markets, to be able to build out our capabilities in that area. So I always say, do be consistent. Know what you do well, and ensure that your people and your governance are always consistent with your strategy, and that you're kind of building across those three pillars, and tell the story of what you do well. And one thing I always say don't do is don't tell us that you have no mistakes. Be candid with us, be transparent with us. That's a core tenet of our culture, and it's something we really value in partners. So when people come in and they kind of hide the blemishes, it doesn't help at all. I mean, we really like to start out on a very transparent foot. I think it should be a core piece of any private equity firm's strategy to look at their workforce and say, how can I best prosecute the environment that I'm in, and anyone who's not recognizing that diversity of decision making is beneficial to their firm, I think is kind of living under a rock somewhere. And so then the question is, well, what do you do about it? And is it really a strategic priority? And I think that the firms where we've seen it become a strategic priority, things have changed. And it's particularly around recruiting and hiring, be it in sort of an analyst class just out of college, or even kind of post-MBA. We're seeing a lot of our firms make significant progress there. And then, of course, there's a real focus on promotion and retention of women and minorities within their organizations. And that's where the talent management piece, I think, is particularly important.
Mm-hmm.
I think they should absolutely ask the questions. I think we're still probably at a stage with most general partners where awareness is still a question mark, that some are just not as aware that it's a focus for LPs. We're quickly moving past that, but it wasn't too long ago that if you asked about diversity at an advisory committee meeting, for example, the general partner just sort of threw up their hands and said, "Oh, it's hard. We'll think about it later." And we've mostly moved past that in the large cap space, for sure. I think smaller firms, it is more difficult because it's more time consuming, and you have to look a little bit harder if you want to pull in a pool of candidates who are diverse. That takes a little more work. Mm-hmm. But I think as an industry, the awareness is rising, and LPs can and should play a big part in that, because ultimately we should care about our general partners generating high returns. And if you believe that diversity is good for decision making, then the return should follow.